How are you feeling about the economy? This week, we'll find out about consumer sentiment, housing market activity, inflation, and more. Let's dive in. Before we begin, remember to like this video and subscribe for more economic updates. Of all the numbers we'll see this week, perhaps the most eagerly anticipated will be the Personal Consumption Expenditures Price Index for March. The consensus estimate is that annual PCE increased 2.6% last month, a tenth of a point faster than February's rate. As for core PCE, which excludes more volatile food and energy prices, that's projected to land in at 2.7%, a tenth of a point slower than the pace set in February. As things stand right now, analysts don't expect this week's numbers to change how Fed officials proceed at May's meeting for the Federal Open Market Committee. Currently, traders are betting that policymakers keep rates unchanged in May, June, and July, forecasting September as the first month rates are reduced. Economists expect that real GDP grew at a pace of 2.2% annualized last quarter. If it holds, it will be a decline from the 3.4% pace logged by the economy in the fourth quarter of 2023 and the 2.5% rate recorded for all of last year. The prestigious Conference Board's projection for GDP growth in the first quarter closely aligns with the consensus estimate. However, the board expects output to drop considerably over the next 2 quarters, landing at 0.6% in Q2 and at just 0.5% in Q3. It seems as though a week of economic data wouldn't be complete if it didn't have at least one update on the housing market. Economists expect to find that sales of new single-family homes increased slightly more than 1% last month, climbing to a seasonally adjusted annual rate of 670,000 from 662,000 in February. Despite the challenges currently faced by the real estate market from higher mortgage rates, new residential sales are still coming in above the long-term average of 655,000. Wrapping this week up, on Friday, the University of Michigan releases the final reading of its Consumer Sentiment Index for April. The index is expected to come in at 77.8, just a tenth of a point lower than the preliminary reading of 77.9 recorded 2 weeks ago. The earlier April reading was itself a 1.5 lower than the 79.4 measure recorded in March. The drop was blamed in part on an increase in inflation expectations. Respondents pegged their one-year inflation expectations at 3.1%, 0.2 of a point higher than March, and their 5-year expectations at 3%, also 0.2 of a point higher than March. That's it for now. It's good to know what is expected to happen. Even better is to learn what did happen in the economy. Join us again on Saturday when we'll be back to recap the biggest economic developments of the week. This is Devlin Steele for Augusta Precious Metals, signing out.